Morning, Steve Free in Chicago with the morning grain comments. Well, the markets have taken off some of their recent premium, and there's a lot going on in the markets. As far as Argentina is concerned, as expected, the president is allowing the currency to float. It opened up this morning about 30% lower. They also announced that individuals now can hold $2 million US in accounts. Previously, they could only hold $2,000. And so the market's thinking that there really isn't any extra incentive for the Argentine farmers to hold back selling some of the grain they have in storage. The Argentina soybean export and soybean meal export price is already the cheapest in the world. And there is some concern that if the Argentina farmer sells, it'll depress prices in Argentina and also offer resistance to global prices and could offer resistance to futures. So we're sitting here just above 850 in the nearby beans. This is an important psychological price level, and taking that price level out could add to the fund's shorts. Over in the corn and wheat, prices are a little bit lower. I think people are expecting a little bit lower export sales numbers. For corn, sales numbers could be 700 to 900,000 tons. Last week we did over 1 million tons. In wheat, 250 to 450, and last week we did 225. Now in the beans, the market's going to be watching pretty closely to see if we sell another 1 million tons. Last week we sold 1.5 million tons. And one of the keys in how low price could be going is whether Chinese step up and start buying some inventory for their future crush needs. Besides the Argentina situation, the Feds did raise interest rates yesterday, 0.25%. The conversation they had about looking at a maybe slower increase down the road may have offered a little bit of support to the markets, and we're seeing the U.S. and world equity markets up, but the dollar is sharply higher today, and that kind of goes against U.S. export shares. Now, there is a report out that most economists feel the Feds will come in and increase these interest rates again in the first quarter of 2016. And some people think they could increase as much 2 to 3 times in 2016. Finally, the Senate extended the biofuel credit. They did not change to the producer credit. The producer credit would have been friendly to soybean oil demand. Funds are long soybean oil, so we'll see just how much liquidation the funds want to do because of this lack of the producer credit. The next report by the USDA is January the 12th, and we'll see what the final U.S. crops were. We'll see what D1 stocks were, and we'll see what next year's winter wheat acres are for the first guess. Overnight, most of the U.S. was clear and cool. The next 2 weeks should see normal to above temps and normal rainfall. There is some question marks about northern Brazil and some dryness there. Our weather expert feels that after the first of the year, you'll start seeing some of the rains in the south move up to northern Brazil just in time. Funds yesterday, pretty much sellers in the markets. They're short about 26,000 beans, about 85,000 corn, and 73,000 wheat. We are looking at the annual roll of the index funds starting in January 1st. They're expected to sell 33,000 corn, 14,000 soybean oil, 42,000 sugar, and buy 37,000 crude. That could put some pressure, especially on the corn market after the first of the year. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.